Welcome to Trade Forex Correlation. Correlations within the foreign exchange market plays a big role. And as foreign exchange traders, we trade international currencies from different countries from all around the world. And currencies are issued by central banks and are used for international trade and opportunity investment. In this course, we will cover the in-depth definition of what the foreign exchange currency correlations is, how do we identify them, and how do we trade with them. We will look at the types of correlations within different currency pair groups. Furthermore, we will look at commodity-driven correlations, what moves these commodity-driven currency pairs, and really, how do we identify their strength, their relativity strength, their volume volatility, so that we can profit from it day to day. Furthermore, we will have a look at risk appetite of investors, especially when we see a market condition that is very uncertain. What do we do as foreign exchange traders in that situation? For an example, when there's an election, such as the US election or the French election, there's a lot of market uncertainty. And as investors, we always want to safeguard our investment. And therefore, correlation plays a big role and a big part of our trading decision. And throughout this course, we will have a look at live charts. And you will get to see what I do and really how I apply the understanding, the enhancement, the insight, together with the skill set, both fundamentally and also technically, on the charts to really identify the key fundamental of correlations within different currency pairs. Furthermore, before we can move on to speak about correlations within the foreign exchange market, we have to identify clearly what is Forex. And Forex stands for foreign exchange, which means that foreign currencies are being traded. Furthermore, within the Forex market, there are different market players, and these market players are known as the banks, governments, international corporations who have exposure to large quantities of foreign currencies. And the moment the market players invest their money abroad in terms of international trade or in terms of international investment, the markets react, and therefore we see liquidity, we see volatility, we see volume fluctuations, and also a lot of momentum in the markets. And when we have a look, and for us to understand liquidity, volatility, volume fluctuations, and momentum, we have to understand what correlation is. Thank you for joining our course, and thank you for walking this journey with us.